Which would you rather invest in, stocks or real estate? Let's talk about it. So let's first just go over the pros and cons of both stocks and real estate. So let's start with stocks first. With stocks, it's a lot more liquid and you're able to take out your money a lot quicker than if you were in real estate. It might take a few months or even a year, even longer to sell real estate, but with stocks, you can sell it on that day if you wish at that market price. Another pro for stocks is that it's a lot more of a passive investment source. So once you own a share of a company, once you buy a stock, then you can really just leave it and you don't really have to think about it, and it can go ahead and appreciate or go down in value, or you can recoup your dividends from your stocks, and really you don't have to do anything. You just have to own that piece of stock and there's not much else that you have to do. Having said that, if you are day trading and you're trying to make a profit every single day and you're in the market since open and all the way till closing, even after hours or pre-market, then you might be spending a lot more time and maybe it's not as passive. But if you are kind of like me and you're like a long-term investor and you just like to keep your stocks and just leave it there, then it's going to be a lot more of a passive investment for you. I guess another pro for stocks is that you don't really have to have a lot of money, a lot of capital to get started. You can invest, $100, $200, maybe even, $50 to start with, and you can buy a share of a company and you can go ahead and learn how all of that works. And so you don't have to have, tens and thousands of dollars to get started, and it's pretty simple to get started. You just have to open an account on a brokerage account and you can get started right away. So it's very easy to start and you don't need that much of a capital in order to get started as well. So now that we talked about the pros of the stocks, now we can talk about the cons. And one of the cons is that it's much more volatile than the real estate market. You could have bought a share or stock at a price of $30 and the next day it could go down to like $15. And so it's a very volatile market. Vice versa though, if you had a stock that's worth $30, it could go up in value to $45, and you never really know. But again, it's a very volatile market, and it's advised that you know what you're doing. It's advised that you do your own research, whether or not you're in the stock market or you're in real estate. It's advised that you do your research for any type of investments, and that you go ahead and do your homework before you invest in anything. But it is volatile, so that's something to be aware of. Another con of stocks is that you don't really have control over how that stock is going to perform. So for example, let's say you buy a share of Apple. You don't have control over what Tim Cook does in Apple. You don't have control over what the future of Apple is like, and therefore you don't really have a control over your investment. You can only speculate and hope that it appreciates, and you can also look at dividends and see that these companies are paying a 6% dividend, and so that could be some type of a way where you can secure and kind of have a less riskier investment. But at the same time, it doesn't mean that the company is not going to slash dividend payments and whatnot. And so one day you might be getting a 10% dividend, but then next year they decide to make it 6%, and all of a sudden that stock price also goes down and you're left with zero again. And so that's not something that you have much control over, and that's something that you should really be taking in consideration of. Now, these cons for stocks are actually pros for real estate, right? So let's say you own a piece of real estate, you have a property, it's your asset. So you have complete control over what you do with that property and your asset. And so let's say you're going to go and fix and flip a property, and once you go ahead and rehab it, it doesn't hit the market price that you actually wanted to, that ARV that you wanted to sell it at. You have other options. You can go ahead and keep it, put a tenant in there and collect cash flow from it, or you can go ahead and try different ways in order to sell it. And so there's a lot more exit strategies, and you have a lot more control over your assets. So for a lot of people, they like control over their investments, and if that's the case, real estate is really, really great for you.